There's still, you could tell by looking at the hour by hour action sometimes of silver and gold versus the S&P, especially silver, because some people connect it only as an industrial metal, and therefore if the stock market goes down, silver must too. Okay, they're making a mistake, okay? But you can see it in the hourly ticks where the short-term traders say, oh, S&P just dropped 5, let's sell silver off, it drops 25 cents, and the game is going on still. It's a wrong thought process, because when you stand back and look at the bigger picture, take for example, S&P made a high January, February, collapsed into April, 20% drop. What did gold do during that time? It exploded, not hour by hour, but month by month, okay? So S&P had a sharp, cataclysmic 20% drop. It scared most people, most of that occurring in several weeks of March and April. So it was really, almost crash-like. And yet gold went up, okay? So people need to rethink that assumption, because it will trap them into missing something.
No, when we also look at Bitcoin, I know we've been seeing Bitcoin really collapsing in price recently, which is something that you've been predicting. What do you anticipate, and what is the momentum showing on the Bitcoin chart right now?
Well, we showed this over the last months, and especially back in a September report, we showed an overlay of the S&P 500 back in 1987, when it had been going up and up, and the price chart just looked lovely. Momentum had built a floor spanning a couple years where the price was going up, there was rising lows, but momentum was making the same low over and over and over again, where it was dropping down, the price was dropping down to its rising 3/4 moving average, and therefore the oscillator showed a repeated drop to the zero line, okay, a flat floor, a structure. When it broke it, it crashed. Didn't even wait around for the end of the month close to break it. It broke it intra-month, gone. Okay, this is the 4th time that Bitcoin since 2023 has dropped down to its 3/4 average. That number this quarter is 101,390. Okay, we've been trading below and above that for the last few days, so we've come down to that structure again for the 4th time. We don't think it'll hold this time. The question is, do you wait for a monthly close below that number? We got a long way to go to the end of November. Or do you maybe assume this time, don't wait, it's not going to hold, just like in 87 for the S&P. That's our assumption. Now, does it have to crash? No, I'm not going to argue that. Crash meaning like 30%, a matter of a week or so. But it's a disastrous number regardless. And, it wouldn't shock me that when you break this, that 3 months later or maybe 3 weeks later, you see that the Bitcoin, which by the way is highly correlated to the month by month price action of NASDAQ 100, is 30% or lower below where we are now, meaning you could be 70,000, 60,000 or something on Bitcoin. Remember, its recent high was 127. It could cut you in half, much of it occurring rapidly. Now, the problem with Bitcoin doing that, aside from proving to the gold doubters that Bitcoin is an alternative to gold, which it is not, but it's linked to the stock market. Its inhale-exhale behavior since 2021 on Bitcoin monthly bar charts versus NASDAQ 100, it's practically an overlay. They look like brother and sister. In fact, we ran those charts and removed the name on the chart and the price scale, and you can't tell the difference hardly. So if that Bitcoin breaks our structure, and it's down to it now, if you break it credibly, like a monthly close, or don't even go lower than what you've already done the other day, like 99,000. It's likely to have a wave impact on NASDAQ 100 because the same speculative inhale-exhale fever is going on there. And sure enough, when we got Bitcoin getting bashed the last week or so, what's happening to NVIDIA and Palantir? Suddenly they become weak components of the S&P and the NASDAQ. Watch it. Watch Bitcoin. It's very important. All norms of technical analysis like RSI and so forth will be a total falsehood if you follow them. In other words, once you get silver up to a monthly RSI that's overbought, if you get out there, you're going to miss the move. Even back in, I think it was 79, you got monthly RSI above what is the overbought level, stayed there for like 5 months. In other words, you should have bought the overbought level because it stayed there for 5 minutes, it exploded. In other words, all the norms get smashed. We have a situation in silver where, for some reason, and one reason may be artificial suppression of the market by certain banks, maybe inclusion with central bank, I don't know, where it stayed in a 50-year range. You go back and look at copper or lead. We ran those charts a few weeks ago, go back to the 1970s, and you'll see that they were in a range, 1970s, 80s, 90s, into mid-2000, like 2005 or 6, where they were stuck in this orderly reality. Up, down, up, down, up, down. And when they came out of it, literally in a few quarters, they quadrupled in price. These were different times. They weren't doing it together. Copper went up in like 2005, 6. Lead went up in 2007, so it wasn't the same driving force. But they quadrupled in price. And then since then, they've lived in a new zone of reality that's like 4 times the average price of that prior zone of reality. How come silver's still in the prior zone of reality? Look at gold. I mean, where was it in 1980? $850. Silver was 50. Okay, where was it in 2011? 1920. Where was silver? 50. Gold's 4,000. Where's silver now? 48? Okay. What's going on here? We know silver's in great demand by high technology. Solar panel production. Chinese are about 80% of that market. They need silver in the cells. And there's also AI demand for silver, microscopic but pervasive, okay? It's a great conductor. And we know for 5 years now, the new supply has not met demand. There's been a deficit 5 years in a row, supply-demand deficit. And we know that when silver price goes up, it doesn't induce necessarily more silver production. Why? Because most of silver production doesn't come from silver mines. It comes from base metal miners who are primarily motivated and focused on getting copper out of the ground or magnesium or whatever. And silver is just marginal to them. Therefore, if silver price doubles, it's not really that much of an incentive for them to produce more. If silver matched lead and copper, it could go to $200. Okay. Now, and also if you go back and look at 1980 high at 50 or 2011 at 50 and factor in the decay in the money in it, the buying power, the real buying power, the dollar, not the dollar index, that's measuring paper versus paper, but the dollar quantity almost doubles every decade. 90% increase in the quantity of M2, Well, if you factored that in, silver would probably be $200 now just to match those highs in real dollar terms. Wouldn't be exceeding them, it'd only be matching them in real dollar terms. So all kinds of things point to the acceleration phase going dynamic into a new reality. The pullback, I think, is probably largely spent, if not totally spent. In fact, that was like a week or so ago. If you'll just notice what's going on, like weekly close to weekly close, we're wheel spinning. It's not really going down, down, down. It went down and then it's wheel spinning. When we examine the short-term technicals of silver, like the day-to-day, week-to-week type stuff, it's building a base, which you can't quite see it on the price chart, but on weekly momentum, I could see a clear ceiling that's been built, such that, I'll give you a number, it's tentative right now, you get these silver back above about 48.09 next week. Okay, we'll get one more day this week, okay? And I'm going to break out of that base. So all you can do is spin your wheels here. And I think that's what it's doing. I think it's next to meaningless. I know every time we get one of these, there's a whole crowd of internet analysts that say, I got to go to $40 or 41 or whatever, and this is this of the that and so forth. And I don't see it. I see it as a pullback buying opportunity. In fact, I'm making a list right now of miners to add to, because I'm shifting not just into silver related, but also the silver miners. As far as upside, the key trigger for us, and we've stated it over and over for the last month or so, has been the spread relationship between silver and gold. Not the net trend or the momentum of silver or gold, but the relationship between the two. Because we've examined back in the past, and when silver goes ballistic, and again, within that 50-year range, which is ridiculous, I'll comment on that in a minute, $50, $50, $50, the surge that got you up to those levels in the final phase of the 79 to 80 bull, or 2010 to 11, where silver went up fourfold in 5 months, or went up 2.5-fold in 6 months, 2010 to 11. The signal that generated that change in silver's verticality was when it broke out versus gold, the spread relationship. not evident on the silver charts themselves. Right now, the spread between silver and gold is at 1.2%. Divide D silver to D gold, express it as a percent. The major breakout level is not far above 1.3%. So it doesn't take too much to blow that spread through a multi-year high that anybody, even an amateur technician, if you only looked at the spread chart, you could see the ceiling. You clear that and we're gone. The ballistic tone will change from accelerated price tone that we've had for the last, 5-6 months, where silver went from the 30s up to the 50s, boom, boom, boom. Then it will go into that next